Competitive round number 6. Let's take a look at what happened there. We'll whip through it pretty quickly. We're getting to the end here where you guys should kind of see what's going on. But sales, look at that Digby. Digby jumped out with the best sales here and made a profit. But Erie, look at that. Erie made a nice profit there, better than Team Chester. But Andrews, on just $185 million in sales, made a $21 million profit, far more than Chester, far more than Digby. Erie only $110 million in sales, but still showed a nice profit there. And why are we seeing that? Again, we come down here and just to take a look at a comparison, say, between Andrews and Chester. Contribution margin of 35.7 versus 32, so 3.6 better, and 10.4 versus 12.1, so 1.7, so better than 5% improvement in those two, which just by itself then is what, 90 or 9 some million dollars, close to $10 million maybe, in extra profit. And obviously they did some other things then too, in order to achieve that kind of a profit. Yeah, that's interesting. We look at the shares. Andrews actually buying back some stock, and perhaps they maxed out. That becomes a consideration as we get towards the end of the game and you end up with cash. What do you do with it? What do you do if you're Apple or Microsoft or Cisco and you have all kinds of cash? But a couple teams, Andrews and Ferris, have completely paid off any debts, so Andrews can't use their cash to pay down debt, so they've got to use it on some other things. I forgot to look at the ROE up here. An ROE of 23.3, that's impressive. Very low leverage, as we see down below. They don't have much in the way of debt. Other teams, lots of leverage. Erie, negative 2.1 on leverage. I don't even know. I guess you have to have a negative net worth for that to happen. Okay, so cruising down, we'll look at some of that. Net income. What do we got for inventory? Baldwin, Chester each accumulated some inventory. Digby sold off some inventory. Ferris accumulated a bunch of inventory. We still see Chester and Baldwin, making some big improvements. Interesting to see what those improvements may be at this stage of the game. Yeah, it's really interesting then to see what those improvements might be. Lord knows we have lots of capacity, so let's hope it's not in purchasing capacity. Dividends paid. You got Andrews paying a decent dividend, right? So getting rid of some of the cash that they have, which they still have plenty of. Bought back some common stock, as did Chester. Kind of interesting. You got some teams here issuing some long-term debt still. Baldwin, probably because of the investment. Likewise for Chester. And in Digby's case, I think simply to try to get away from the emergency loan. They still ended up having an emergency loan. Not that big, though. So getting that under control, it looks like. Cash, the only two teams with cash, so we know all other 4 teams had emergency loans, but Andrews and Chester, and that's a decent amount of cash, for each of those teams. Be interesting to see how they use that. Look how much bigger a company Chester is than Andrews. Okay, and that's something that makes it twice in total assets, twice the size. Okay, it makes it harder then for Chester to have a return on equity. Okay, because equity-wise, it's quite a bit bigger. Remember, Andrews didn't have any debt, so they do have pretty good equity. But the dynamics, a smaller, efficient company can do very well against a bigger company. Okay, when you talk about total assets and whatnot there. And the fact that they have debt is contributing to interest expense. When we get down to the income statement, we'll see how much of an impact that may have had. Long-term debt $64 million versus 0. So here we go, yeah. EBIT, although Andrews still had quite a bit more than Chester. Look at the difference in interest. Andrews a little bit of interest, not much. Chester, though, almost $10 million in interest. So interesting. And then also Chester, the depreciation. Again, because of the size, right? Size, the amount of equipment, plant, and whatnot that they have. So those two factors, right? $8 million there and $9 million there, $17 million is exactly the difference, really, if you look at that in net profit. Okay. SG&A, promotion, some decent in R&D, those types of things. That's all kinds of different things, I guess, in there. The write-off TQM. Still some big investments by Digby, Baldwin, Chester, and Andrews to a smaller extent. So we'll see. Those could pay big dividends here in the last couple rounds. So, okay. Still, just tons of capacity. Unbelievable. You guys as a group, probably the most reluctant to get rid of capacity. It's been a huge expense, okay, for you guys as a group, because you insist on keeping this kind of capacity around. It's been interesting to watch as a group. Probably, Erie's maybe kind of getting it here. I'm not 100% sure, but yeah, probably as a group, one of the only times I've seen that, even the computer team, and that could be that it's typical capacity when it does that is such and such, and you guys have pushed it in terms of sales, right? So it's had to reduce maybe its production estimates and whatnot. Maybe that's why it has too much capacity. I don't know. It's been interesting to watch. Again, the expense of this, and I would say that it goes along with the profits that you guys as a group are much smaller than things I've had in the past. The expense of this, of having too much capacity, a lot of it's just kind of hidden. Okay, it's not hidden. You can ferret it out if you look at your financial statements and whatnot. Okay, but it's that depreciation and stuff that we saw above, and it's the interest expense, and it's other expenses that we do see that you don't maybe pay as much attention to as you ought to. Okay. On the production, you see the the huge amounts of inventory. Even Chester, yeah, quite a bit of inventory. Look at Digby, Baldwin, just huge amounts of inventory. We don't know if that's just overproducing, if it's overestimating, what the demand's going to be, just all kinds of different reasons those could happen. Erie, a pretty good job, probably why they showed a decent profit. Look at that, a nice job of controlling their inventory. Not a huge contribution margin, okay, but getting there, getting a little bit closer. Their low-end ebb product, 41%, not too bad there, and a lot of that's because of the automation. They've got the highest automation there, so you'd expect their labor costs to be less. And it's coming down. It's not less. Part of that is that they did use a lot of overtime. Okay, you can see that there. Yeah, they're the one team that did use some overtime. But again, they'll save that and some of their other costs. Yeah, Digby had a little extra potential there in the traditional segment, as did Ferris and Erie, actually. And so Andrews, Baldwin, and Chester kind of took advantage of their not producing enough. Low end Erie dominates. They've got three or four products in that, so it's not surprising. Digby pretty close though. Yeah. For some reason, Days must have sold 1 or 2 units up there. I don't know why it would have. 29 units for whatever reason, huh? And there were other units available. It's interesting. Who knows why? Just some random reason that they buy a few units there. Dell is the single biggest. Erie, they're down here at 3rd and 5th, and so it's just a combination of those things. They did sell out, Ebb and Echo each sold out, so while their potential was just a little bit more, they were pretty close, it could be that each sold more than it should have, and these ones may have been able to sell a lot more. Don't know. We have to look down when you get down to the bottom. high end. And this has been the case for the last several rounds. Andrews has just been giving up. They've been in a position to really dominate this, and they haven't really taken advantage of that. And that's been about 3 rounds in a row. Now, it's hard to complain when they get the most profit, but their atom or ace, one or the other, could be far more. Okay, and I think they have the production capacity to make more. They might have just bought it, so I'm not sure. But ace, yeah, they could have made 1,100 or 1.1 million. They only had 439, and again, they could have just bought that capacity, so I don't know. We'd have to go back and check. We get to the performance and size categories. I think they're pretty straightforward. Yeah, I was going to look at ebb when we got down here, or some of their low end. Yeah, just a little bit. Ebb could have sold a little bit more, but they're pretty close on all of those in terms of potential and actual. Erie, though, look at their ace. Could have had 26.4 and only had 10, so they gave up, that one product gave up 16% of the market. Now, Atom benefited, they took back 3.5%, but still 16% of the market there that ace could have had. That's a big number. Perceptual map, we got a couple products here about ready to fall out, but maybe I think Chester actually did make some changes to Cedar that'll get it up there. You see, there are really only 2 products in each of these categories that's fighting out here. These other ones are in reasonably good shape, probably selling some products for sure in reasonably good shape, but these 2 are differentiated. Pretty dispersed there in the traditional segment, pretty good gathering there in the low end. HR, the productivity, we're seeing between Digby, Andrews, quite a bit of productivity. We should be seeing that in a little bit lower wages. And, we got, again, Digby and Baldwin, some big investments here that are going to contribute mightily in these last couple of rounds. Andrews made some investment. They must have made some investment last year, right, that they're still living on, had some improvement this year. It's pretty interesting. Okay, who won? I don't know that that's too much in suspense, so I won't waste a lot of time. I usually like to keep you in suspense, but clean sweep. Look at that, clean sweep for Andrews, 100. Digby actually and Erie both would have beat Chester, our computer team, except they did have the emergency loans, and they both, Digby had too much leverage and Erie a little bit short on working capital, but other than that would have beat Chester. So maybe I was a little bit worried that you guys weren't going to come back and beat the computer team, but maybe you'll prove me wrong, so I hope so. There you have it, round 6C. Good luck for round 7, just 2 rounds to go.